This time around, let's welcome Oliver Sloup to the show. And Oliver is with Blue Line Futures. He joins us from Chicago right now. Oliver, as we take a look at the Commitment of Traders report from last Friday after the markets closed, it looks like we had the big commodity funds still net long on corn, over 100,000 contracts, I believe 106,000. 229,000 contracts on the long side on soybeans. So they are still incredibly long on some of these, and we're right in the middle of harvest. When's the last time you saw that happen anyway?
It has been some time, that's for sure, and you've got to understand also that the Commitment of Traders report is taken through Tuesday, so that doesn't include the big run-up that we saw there in the back half of last week's trade, and it's kind of been estimated from our sources. The funds were estimated buyers of another 59,000 contracts Wednesday to Friday in the corn market, so that puts them a little bit closer to net long, 165,000 contracts. On the beans, it's estimated that they added there too, which would put them above their old record high. They're probably long about 256,000 contracts right now, which just overtakes their record long length from May 2012. And obviously, you had mentioned the time of year being quite a bit different. That was May 2012, kind of in the thick of a weather market, and now you're getting harvest, and you're supposed to see some harvest pressure kind of keep a lid on things, but the funds seem pretty adamant and their appetite for adding to this long position. My concern would be what's going to be left to feed the bull, because this is a market that needs to be fed. If there's no more bullish news here in the coming weeks or months, you could see a mass exodus, and that could lead us to drop down quite a bit. $10 obviously going to be psychologically significant going forward. I think from the technical aspect, the bull camp does have the advantage until we see consecutive closes below there.
Well, you look at the value of the contracts, though. I mean, we are, as I mentioned, soybeans, the funds are net long almost 230,000 contracts. That's similar to what they had on the corn here last, spring, I think. But yet you're look at the value of those contracts in soybeans compared to the value of that number of contracts in corn. I mean, they have a lot more on the line here.
Yeah, they absolutely do. They're pretty bulled up in the grain markets really across the board. We've seen them continue to increase their appetite and buying really across the board, and I think wheat is a market that they're looking to allocate more funds to as well. As we continue to see that position grow a little bit, I think they were net sellers on the Commitment of Traders report last week, but all in all, I think that's a market that might be a little bit underallocated, and I wouldn't be surprised to see that December wheat contract go make new highs above that $6 handle. We got the $5.99.5 there in January. I think $6 is certainly in the cards if we continue to see the strength across the grain markets.